There is big high level talking around things like digital passport. So let's say you buy something off an estate agent, they're going to ask you anti-money laundering. I'm going to ask you anti-money laundering. The lender's going to ask you anti-money laundering. The solicitor's going to ask you.
So what's one of the weirdest things you've seen stop a deal from going through?
The biggest thing that scuffers deals is not telling us the source. One thing I will say to never try to play the interest rate game, because it will always come back and bite you on the bum. Don't move money around until you actually need to. It's a nightmare for us because the lender wants to go, okay, so you moved it from the savings account to the current account that you're going to use for your property.
What are the lenders secretly looking for that most people don't realise?
I think landlords are in this, they are in the advantage market at the moment, because where we're seeing the market is
Hey UK property people, we'd love to have you join us at This Property Life Networking. It's a no-guru friendly community. Our network gets a private WhatsApp group for daily advice and deal sharing, monthly online networking with live market updates and in-person events every year. Hit the link in the description below, join today and start building real connections with active property investors. In this episode of This Property Life, I'm joined by Peter Vandervennin, owner of the Mortgage Consultancy, a mortgage advisor with 25 years in the industry and 43 years in financial services. So this is someone who knows the mortgage world inside out. We are going to do a no-fluff, rapid-fire Q&A where we get straight to the questions every property investor secretly wants answered. So if you're buying, refinancing, or just trying to figure out what lenders are really thinking, this episode is packed with clarity, insider tips, and stories from the front lines. I'm your host, Sarah Blaney. Let's get into it. Welcome to This Property Life, Peter.
Yeah, thank you, Sarah, for inviting me, and welcome to everybody watching.
No problem. Okay, so let's get straight into it. I've got a few questions for you, and it might lead on to a few other questions, but we'll see how we go. So, number one, why are lender fees so stupidly high right now?
Okay, yeah, a very good question, Sarah. It's really down to list trust at the end of the day, and where wholesale market rates are just the same as every investor. Triage and work the numbers, and then if the numbers work, they don't buy the deal. The same thing with the lenders. Today, they're buying our money in at 3.72 as of close of play last night. That's a 5-year fix, which is the benchmark of wholesale funds. They're buying it in at that. They need to make somewhere between 1.25 to 2% margin on top of that. So if they're giving you a rate of, let's say, 4.5, they're now losing out. So they need to make a 1% elsewhere. And also the other issue is, particularly when the high rates were a lot higher, the high fees came about to make a rental stress test work, because the rental stress test is generally based on the pay rate, what you actually pay. Some lenders don't do it, they still load the rate. So there is a whole raft of mechanics behind it. But I will defend lenders, they are not profiteering in any way, shape or form. It's just where the market is at the moment. We've been very used to obviously quite low rates pre-list trust. This is a little bit more sensible. Hopefully, obviously with the economic situation and so on, if that gets better in towards next year, most of the lenders are now telling me, and we connect with lots of heads of lending, sometimes when maybe wholesale money becomes cheaper, let's say it becomes 0.5% cheaper, they may say, well, we're not 2.25 off the rate, but we'll also start to reduce arrangement fees as well. It will take time to get rid of that. Going back to your £1,000 to £2,500 times the range of fees, which would be normal, is going to take a few years, I'm afraid, and you can blame this trust for that.
If you're loving this episode, don't just listen, subscribe. Hit that subscribe button right now so you never miss our weekly property chats, deal breakdowns, and market updates. It takes a couple of seconds, it's free, and it helps us bring you even better guests and property chat. Yes, her legacy lives on, and yeah, I look forward to the days where we can have a little bit off the rate and a little bit off the fees. It can be really, really big. Okay, second question. Are brokers, I know the answer to this because I'm talking to a broker, my broker especially, are brokers worth the cost, or should investors go direct?
Okay, so the first way to answer that is buy-to-let lending is deemed as riskier business than residential because you're not living in the property. So there are a number of lenders that you might want to use that you can't access. BM Solutions, for instance, just as one, a major player. But there are a lot of specialist lenders that we talk to that would do a really good deal for a client, but they want that person in between making sure the deal that works, making sure that they're leveraged properly, they're assessing risk, and they've had a holistic view, not just as I was saying to you earlier, just quoting a rate. It's more about that. So they want that assurity because they're in that specialist market. You know, if you want your money in and out of a deal, they want that assurity things are going to work. It's a bit like a bridge. Anybody can get really into a bridge. They're quite reasonably easy, but most lenders are the more ethical bridges will always want to make sure, how do we get out of that? So it's about a whole piece. And yes, you can go and see rates on there. I have people enough recently, AI had a client come to me and go, well, you've quoted me this and this rate with these fees. AI's ChatGPT's found me this rate with the Coventry, as it was, or Godiva, as their buy-to-let arm is called. And there's no fee on this one. I said, yeah, it's fine. But we quoted you Kensington with these rates, but Kensington actually got a cheaper rate than Coventry without the fee. So actually, it's still pertinent to go there. We only just said that as a sort of
Yeah.
discussion document as such. But what I'm trying to demonstrate there, don't believe everything ChatGPT. Obviously, it's a very useful tool, very good for getting the basis of a report or something like that, but it's not be all and all end all. I would like to think here that I'm going to give you 43 years of experience for free. Hopefully, make sure that you don't make mistakes or you consider all angles. So that's the worth of a good broker. The ones to avoid are generally estate agent brokers that they could probably do 90% residential cases and very little buy to let. We do 70% of his buy to let, bridging, development finance, that type of thing. So we're very
Yeah.
versed in that space.
There was a time, and it's not so much right at this specific moment in time, but going back to those Liz Truss days, and actually just that whole period, sort of pre-Liz and post-Liz, where there was sudden rate changes, and literally you'd have a mortgage sort of going through, and suddenly it would just the product would get pulled. So what's going on with the rate changes? Why do products get pulled at the last minute?
Okay, yeah, absolutely. Again, very good question. And we connect very, as I said, very high up level with lenders. We do understand. I will defend them, and the reason being is that they buy tranches of money in. So they will, and when the market's more volatile, at the moment it's reasonably stable for the last 4 or 5 months. So it's a much better market for me. I'm not saying to somebody, get your deal in, I need to secure that rate because it could be more tomorrow or it might drop or whatever. But the lenders buy tranches of money. Now, when the markets are volatile, they buy smaller tranches of money. And if that gets used up, then they have to go back to the market. And if the rate's higher, then they have to reprice. So in times of volatility, that's when it's a complete nightmare. It was a complete nightmare for us. I would quote somebody a rate at 2 o'clock and they go, yes, go ahead. And I said, well, okay, get me these documents. I'll do it in the morning. And an hour later, the rate was pulled and the rate goes up. And those times, they didn't give you any leeway as well. It's not like, oh, 6 o'clock the next day, we're going to pull that rate. So it gives me time to make sure that we can still secure that rate. It was, we're pulling the rate now or at close of play today. And then by that time, I've already got other people in front of that person. It was a nightmare for us. And I feel for landlords. But that is when you've got the volatility and the uncertainty. That's what happens. It's a much more stable market at the moment. And even now, we're saying to clients, if you agree a deal, secure it. We don't think things are going to go up. But once you secure the rate, most lenders, if they issue a lower rate, we will get them people swapped onto it as long as you haven't completed. So we always watch what deals are going around. And I have a team that's managing the offers once an offer's out, as long as up to about 5 days before, working days before completion. We just run it through that lender. Have they got a cheaper rate or has circumstances changed? And if we can swap cheaper rate, then we will do and get you a cheaper deal.
Ultimately, the market likes stability, doesn't it? Although I have had, going back a few years now, way before COVID, we were operating quite strongly at the time, buying in certain postcode in Liverpool for HMOs. And Shawbrook was the main lender for HMOs in that area. And overnight, they pulled out the market. And our broker, our commercial broker back then, said it was literally because they had overexposure in that postcode. So is that a thing as well?
Yes, it absolutely happens. Paragon, another lender, just to, to not to deride Shawbrook, but we will put a case up if Paragon cheaper lender than Shawbrook, for instance. But they are very specific as well. So we would always, they have a property referral team. So we would always send it up to them because they might have a concentration of, one derivative, an HMO, rather than a single let, but they also have a single lets. It's all about risk. And the biggest problem what I have is getting landlords to understand the risk from the lender's perspective, but also get them to understand the overall risk, also to put their own portfolio and so on. If you don't manage risk, then that's when you fall over. But what their lenders are doing is the remit why that happens. I know very well Daryl Norkett, who's the head of the property division at Shawbrook. It's always think, first port of call, the lender thinks, if we have to repossess that person, what can we do with that property? So if they've got too many in that area and there's really adverse conditions, I'm not saying a 2008, but let's say something close to that, then they might have to sell a lot of those property repossessions very quickly. Now, what's their value in that if they've got to do a fire sale? So that's
Yeah.
the reasoning behind it. And, Paragon always argue, we've been around in all those times. There were certain, as I'm sure, wasn't around in 2000, they pulled lending completely. Paragon always stuck in it. And Paragon, not, it sounds like I'm very pro them, but I'm just saying they are a good lender. They've got a property division, so they've repossessed very few people. If the deal works, they will actually take the deal off the client until they can get back on their feet, and they could possibly give it back to them. Only lender I've ever known to do that. So, but they're changing as a bank. At the moment, the head of lending there's gone recently, and they're a lot much better placed. And again, but it doesn't matter what the brand is. It's about risk, their overall risk.
So I guess that kind of answers my next question, which was, is it true some lenders just don't like landlords? And I think where I was coming from on this is that over the years, we've had a few offers through from, or almost offers through from the mortgage works, for example. And it seems to be you get to a certain point and then they just go, can you explain why you keep buying so much property? We don't really like that. And then you're like, well, that's my job. The mortgage works seems to me anyway, they seem like they hate me, Peter, but I don't know if that's true.
Yeah, I mean, well, let's talk about TMW. They are the largest lender by volume last year. They overtook BM Solutions as the largest. I've just had the rep in for the BM Solutions here just recently and a couple of hours ago. You've got to understand that both those two lenders are huge giants. They've got a huge amount of exposure. Are they really landlord friendly? I would argue not. It depends on which space you are in. Sarah, I'd like to say to you, you're in the very much in the specialist space. We shouldn't even really be putting you there because they're always going to ask that. Why are you doing this? Why have you got a bit? Well, I know we've got some commercial. They don't like things like that. So it's about the experience of the broker at the end of the day. I can put you with TMW, but look, it kills me if we have to pull it and I lose all my profit if I have to then redo it with another. It's about trusting your broker and going, one, quite rightly ask the question, why aren't you going to Tinder? Why aren't you doing this? There seems to be a cheaper deal out there. It's a broker can't answer that. It's like HMOs. They're very, very picky about HMOs. They want communal rooms. They will not, that even the large kitchen diner, I've had them turn those down as well. They set their stall out at being a responsible HMO lender. That's their stance, whether it's right or wrong. So you have to be very, very picky if you use their HMO product, and the valuations are very suspect as well. So it's about making sure that you get the lending you want, and that's coming back to that previous or two questions ago about the worth of a broker, actually giving you the bigger picture. But for a vanilla buy to let, one landlord, he's got his first SPV, he's borrowing in it. Yeah, why not? Absolutely, we would give them the cheapest deal. But as soon as you start getting a few properties and being constructive with, like they won't do, if you buy it, refurb it in a couple of months' time, they won't let you refinance inside 6 months. Things like that. It's horses for courses.
Bit inflexible. Okay, so I think it can be honestly said that for property investors, there are two things that they really hate. Actually, three things. One is dealing with the conveyancing process. The second one, any type of refinancing. And the third one, dealing with utility companies. So obviously, you can't be held responsible for two of those. But on the finance side, the process of refinancing is getting bigger and bigger as we go on. I mean, I think back, 10 years, and what I thought was an arduous process back then seemed like a walk in the park nowadays.
If I'm honest, our biggest problem is solicitors and the solicitor's going to do the job. More and more now, I'm being really, how can I say, not that I can tell a customer what to do, but what I'm being is consultative. Say, well, look, if you, the complexities of this deal, if you don't put the element of the right lender, the right broker, and the right solicitor, it isn't going to get across the line. So, what do you want? Do you want your end goal? And then sometimes that might not be, somebody that's 0.2% more expensive. Well, as I say, never mind the quality, feel the width at the end of the day. But if you don't have that, so more and more, if you want a cheap solicitor in Wales because they've only got one branch and they're quoting you 300 quid less than somebody else, that's when you get the ag and everything else. So sometimes the old adage of you pay for what you get, at the end of the day. And it's about making sure the deal happens and putting it all together, particularly things like title splitting and things like that. If you don't have a solicitor that understands it, the process, if the process is not followed, that's when it all costs everybody money and so on. So all those are the types of things that really lend itself. On the plus side, the industry, and I don't know whether you've heard this, but there is, with the advent of the internet, AI, and all of those types of things, there is big high level talking around things like digital passport. So let's say you buy something off an estate agent, they're going to ask you anti-money laundering. I'm going to ask you anti-money laundering. The lender's going to ask you anti-money laundering. The solicitor's going to ask you. So
Yeah.
there is moves in the industry to do that with the digitalisation of land registry and so on. So I do think it will be a lot easier in the future. The government are trying to drive it more from the residential, so allow people to swap rates a lot quicker and easier. That will drill down into this space. But if I'm honest, I don't think it will. It will help, but I think all landlords now, and we've certainly seen that with our client base since Liz Trust, everybody, nobody buys a vanilla buy to let these days. It's all got to. You've got to be, if you're going to pay these rates, you've got to be ahead of the game. So everybody's looking to buy, refurb, refinance, or do small developments, that type of thing. And these types of things then won't perhaps lend itself there. It might be perhaps a back portfolio one where you're just refinancing pound for pound, for instance, or something. A digital passport and things like that will help that in the future. But I think the more complicated deals have got to have those quality people, and I am going to say broker, but quality people from the solicitor front, and a client that understands that as well. I think, and those are the things that
Yeah.
I think will happen in the specialist market.
Yeah, I think a digital passport for an individual around AML would just be the best thing. I think a digital passport for a house would be an amazing thing. And you just think, why on earth can't these things be implemented right now, especially a house passport?
Yeah, I definitely think those things will be there. I think the AML one we're pushing, obviously, because it's a complete egg for us. It's not about getting business in. We do 100 plus cases a month. What we need to, I need to save time. Time's money. Huge costs have gone up, as everybody else, and landlords as well. I fully understand that. So I think those things will happen. They're actually talking about also digitalising the actual conveyancing process. Again, specialists, you can't do that. But I think if it's, a vanilla, as I say, vanilla buy to let, and you're just going pound for pound, definitely think that will happen.
So let's get on to that process of that refinance because I've got some questions about the paper that they need from us. Do they really check the affordability properly? Because sometimes it just feels like it's a box ticking exercise.
Yeah, it depends on the size of the lender, if I'm honest, and how specialist it is. I will defend lenders. I'm going to be honest, it is a pain for us as well. And that's why, well, first thing, we've got client portal, so we've got data compliant, upload facility and so on. The the main remit is we are under the auspices of the FCA, Financial Conduct Authority, and the first rule: know your customer. Now that means inside leg measurement, I'm afraid, as well. So we have to start from that perspective because we've got the regulator, and you're going to get your mortgage unless the regulator regulates the industry. If it's unregulated, it falls over like 2008. So I would say we don't want the 2008. And those things are brought in to make sure. A lot of this come from all the Basel agreements in Switzerland, banking agreements, and I think we're on Basel 4 point whatever now. It's all to make sure that 2000 was devastating. I lost an income overnight. The business we didn't close down, but I wasn't making any money. I was hardly anything through the door. It was no good to anybody. It certainly set Midlands and North back many years. London recovered very quickly. The thing is, responsible lending, advocates good lending. We don't want repossessions and so on. So I think it's all in that mix. What will happen, I think, is that your AI digital bit will come on, and then some of those things will be able to, find out, a lot easier. At the moment, we're sort of trying a CRM system. So I could say to you, Sarah, thanks very much. I don't know you, for instance, let's say come on board, and this CRM is the first one to ever get this. So is it okay if I just look at your Experian file whilst we're on this call? This system brings it up straight away, and that cuts out a lot of the red tape. You've got open banking. The downside to all this, that's really good. That sounds fantastic. I'm old school. The downside to all of that is the big brother, the government know more and more about you. But obviously, the ease of use, I completely understand. But you've got
Yeah.
to understand the ease of use comes with a potential price down the line. There's always an advantage, disadvantage to everything in life, I've learned.
Yeah. Yeah, I have really noticed, it's interesting you say that. I've really noticed that every single transaction, movement that you do, like metaphorically and physically, is tracked now. And it didn't ever feel like that before, but it does feel like that now. And I guess that's because we've got the technology to do it. And yes, we all want that convenience, but it does feel very Big Brother like at the moment.
I think with the technology piece, they're able to find out a lot more than they have. I mean, I was talking to the head of lending at Adrian Maloney at Kevin Lyons Building Society, and we advise a lot on social housing mortgages, so that could be 24/7 care or that type of thing. And I said to him, "Well, why won't you allow that?" And he went, "Because we just don't like it." And I said to him, "So in your portfolio of properties, can you honestly tell me that you haven't got people with social housing mortgage, but because they've just product switched every time or never told you, you don't know about it?" He went, "Oh yes, yeah, we know that." Okay, if you know that, then why don't you formalise it and maybe charge a little bit more and do it honestly? But so that's the stance from a lender. But all I will say is that we are getting referred lots of people that I would always advise a client do everything correctly, and particularly if we go to social housing. The one piece of advice I can give anybody: buildings insurance. Your normal landlord insurance will not cover anything like that. As soon as you've got a corporate tenancy, it does cost a little bit more, but not much. You insure yourself properly.
So let's get on to some of the things with why people get declined from mortgages. What do you think is one of the most common reasons that a mortgage lender could decline someone?
Most common reason would be sort of late payments or smaller CGJs are a real pain, or recent ones. A lot of the time, particularly for a lot of my bigger landlords, the most common one is the water companies. The tenant's got the water bill. Their water companies are notorious at going, "Well, we can't find the tenant, they've gone." So go on land registry, find out who the landlord is and slap it on him. And that can take, months to unwind. By that time, he's got, 3 or 4 applications now going belly up, making the lender understand it wasn't his problem. Obviously, lenders look at it, no smoke without fire. So it is a huge problem. Phone contracts is another one that's a problem where lenders, where you might finish a contract. And even I've had a case recently where somebody's literally stayed with, I can't remember, Vodafone or one of those, and they said, "Yeah, it's fine. This is your new contract." Particularly these ones where you're buying the phone and the service with it as well, sort of thing. And there's 13 quid outstanding on the other one. And they haven't told you, and you think you paid it all, and it's just stupid. But the pain it causes the client and ourselves is huge. I mean, obviously, some people do. I think the only advice I can give to people is I would always credit reference agency, probably like Check My File or something like that, where it checks all the ranges. Pay your subscription, 15 quid a month. I don't know what it is at the moment. We use that all the time. And then just monitor that to try and make sure that there's something there that you don't know about. It is a right pain for you and us. But the thing is, if you don't do that and it's good housekeeping, it could lose you that golden deal. You know what I mean? And that's the thing. But there are, and there's about to be a big announcement in a week's time with a lender who will do a lot more of that sort of adversity type stuff. And we're not talking together rates now, we're talking more reasonable rates. So the market is changing. Is it something you can't avoid? But also, I've had the few over the years. The other one is parking tickets, where people dig their head. Why take the risk of taking a CC? Just play the thing.
So what was one of the weirdest things you've seen stop a deal from going through?
The biggest thing that scatters deals is not telling us the source of the funds. Okay.
Especially
Abs-
nowadays.
Absolutely. Do not try and hide the source of funds. Don't move money around until you actually need to. It's a nightmare for us because the lender wants to go, okay, so you moved it from a savings account into your current account, into the current account that you're going to use for your property. I've now got to get bank statements for all of them, show the providence of funds. Just leave it where it is. Move it in for the solicitor later on down the line. But, we do a lot of clients, the source of funds are from Nigeria. It's, I'm going to be honest, they've got to go off to our financial crime team. It's going to take probably a week, 10 days before I get authorization for that. Your solicitor's going to need to do that. So if you're bringing funds, sorry to pick on Nigeria, but get those funds into the country a year before you need them. Get them in the UK system, get the money laundered. We've had cases where people have moved in legitimate money, and the bank, the big six, sometimes if they see it coming from somewhere or they have us, next thing it's frozen, it can't be used for the again. Don't leave things till last minute. And what I will say is, failing to plan is planning to fail.
I think you're right around this whole source of funds thing. We were selling a property that we had, and it was literally like it was unencumbered from our side. Someone was buying it without a mortgage, so and we were the only two people in the whole chain. And you would think that this would be one of the simplest transactions ever known. Two people, no mortgages involved. The guy buying it, well, not a lot actually. I think about 30,000 of his money was coming from premium bonds. Bearing in mind that is a government agency. And they took about 8 weeks to do the money laundering on it because the solicitors were like, well, the National Savings and Investment team have to give you this type of a document with this specific word on it. I can't even remember what it was. And NSNI don't do that because they don't have to. And it went backwards and forwards and backwards and forwards. And we were like, guys, this is 30 grand for a 360K property. And it's coming from premium bonds, which are government owned investment vehicle. What's the problem? But it was a huge problem. And honestly, the sale almost fell through because of this. So
Yeah.
it feels like it's AML for the sake of it and just to torture us poor property investors.
I think that's, the government would argue that's the fraud prevention. At the end of the day, the few mess it up for the many, but that is just where we are. And, we're we're getting new and new different schemes coming on all the time. I've just had really 2 emails in today are scams, only because I'm careful at watching them, but they're very sophisticated. I won't bore you with those, but they come from one from Aviva and one from, but they look very legitimate. Always look at the email address is a big giveaway. And also the piece of advice I will give around that type of thing from now we're talking about fraud is, whenever you deal with a solicitor, even if you dealt with them every time, when they ask for that money, send them 10 quid first of all. Phone them up and say, "Have you got my 10 quid?" Then send them the rest of the money, okay? Because there's more and more of this email interception, and you could then suddenly lose 30 or 40 grand. If you lose 10 quid, you lose 10 quid, you come back. So those are the things about just being meticulous with your processes and systems.
Cool. And the last question for you then, Peter. Actually, no, this penultimate question. What are the lenders secretly looking for that most people don't realise?
Oh, let me think. What are they looking for? I guess for your landlord's perspective, try and get inside and underwrite a lender's head. It's all about risk at the end of the day. The better you can make a case, the easier it'll go through, the less aggro you'll get, and so on. I still haven't really answered that one, and I'm gonna. What are they looking for? If I'm honest, and I think we had this conversation prior to this meeting, but at the moment, I'm very buoyant about the lending market. Criteria changes are really, really good, so I'm very positive about that. They're all trying to loosen that. I think that landlords are they are in the advantage market at the moment, because where we're seeing the market is there isn't that much lending around, so they're all trying to tweak their systems just to pinch that other bit of business off another lender. They can't do anything about rate, as our previous question, because that's wholesale rate driven. But lots of lenders doing things that they wouldn't do 6 months ago. So perhaps that's answers that question in a way. But as there's a couple of launches next week where, we've got a lender's gonna launch a bridge to buy to let deal. So it's 2 offers before you bought the property, guaranteed exit, that type of thing. So
Yeah.
it'll be very flexible. So these are the types of things that the market needs. And the beauty is when we had Liz Truss, they were winding all those things back in, making criteria worse and worse and worse. The beauty of this market is it makes them think outside the square. How are we going to get that money through the door? Because they want to lend the money. They've got the money. The market's awash with money, awash. I've never seen it with so much liquidity in it. But then you've got the risk. So they've got to try and work out how they can lend it, but responsibly assessing risk as well. But I do think it's on the advantage side. As I say, I've got a caveat. I can't do anything about rates and they can't do any. But if they allow you to get in and out of deal and get your money out of it, those are the types of things that we're seeing more and more that allow you to do those things.
Okay, and finally, and I think this is a question I get asked constantly from members of the This Property Life network, but and I'm sure you get this quite a lot as well. Right. Should I fix for 2 years, 5 years, or should I just go variable right now, Peter?
Yes, okay. I, as a broker, and I would like to, a good broker, it's down to personal circumstances. It's not, there's absolutely no way I can answer that because that's a crystal ball thing. Okay. Generally, I would say that it depends on your personal circumstances. Cash flow is, is that if that what's pertinent for that particular person? What's the driver for that particular landlord? Raising money, cash flow, whatever it might be. It's about putting all those in place. The downside with a 2-year fix is it's stressed a lot higher. So if you're going at 75% of the value of the property on a 2-year fix, a lot of the time it doesn't work because we're not using the pay rate. They load the rate because the regulator says that's what they've got to, not the lender. The regulator says they've got to load that rate. So often it doesn't work. And the other thing is, I am an investor myself. I'm a portfolio landlord, and 2-year deal, and you've got around £5,000 worth of arrangement fee. Well, you're trying to play rates, hoping it's cheaper in 2 years' time. You've just lumped £5,000 on. Those are the things that you've got to consider.
And 2 years comes around really quickly, and then you've got an inside leg measurement back out, and I think that's why I always go 5 years because literally the pain of the paperwork, 5 years is fine.
Absolutely, it's just happened to me. But I've always leased cars. I never buy a car because I'd rather invest the money, if you know what I mean. And I can't believe it. Yeah, they just sent me 6 months before. Then surely that was only the end of last year, didn't I get that? Okay, so I've got to make some decisions, and I don't want to, but I prefer 2 years. 2 years. Well, we get away from property, but I like a new car every 2 years, so it makes sense for me. But I guess the older you get, time quickens up, doesn't it? So yeah, 2 years is no time. I'm not saying don't do a 2-year, but it would be. I've just advised somebody on a client on a deal because it's a multi-unit block. To split title at point of purchase is problematical solicitor-wise, and you can lose the deal. We've just slapped it on a 2-year deal. He's actually paid a higher rate and a much lower fee because he's going to make his money out of the time. He's happy to wait, we'll split title. He will end up in 2 years' time with no money down deal, 14-15% yielding property, but he's got to wait and he can do that. So there was a driver for that 2-year fix, rather than a
Yeah.
5-year. Obviously, next time round, we'll stick them on 5 years. Got to be done in SPV. One thing I will say to perhaps finalise and answer your question is never try to play the interest rate game because it will always, always come back and bite you on the bum, as far as I said, unless you're very clever or very lucky.
Fair enough. Amazing. Thank you so much, Peter. Hopefully that's cleared up some little things about the mortgage market that people might not have known, and it's certainly shown us that you know your stuff. Now, I think we're going to try and get yourself back on with some of the heads of lending from different places. So I'm going to throw it out back to the audience listening and watching on This Property Life. Who would you love to see on our future podcasts? Because we do have access to a number of, the heads of lending of different mortgage companies, etc. So drop us a line at team@thispropertylife.co.uk. Tell us who you want to see as a guest, and we'll get lots of your questions to them. Thank you so much today, Peter. If people want to get in touch with yourself and the team at the Mortgage Consultancy, what's the best way for them to do that?
Normally we'd have a QR code, but I mean, obviously contact yourself. You can always put us in contact, but yeah, we're happy. We do make a charge. We don't charge up front or anything like that. So if somebody wants a half an hour, just to see where they want to work with us, they can book it in. We have slots in our diaries, that type of thing. I'd much rather work with somebody that, the failure to plan to fail sort of thing. I'd much rather spend time with somebody for half an hour to make sure that they're on the right course, even if they're not ready to do something today. I've built the practice with fortitude of us on the longer term game, and I'd much rather do that than the short term game, because that really doesn't work.
Fantastic. Thanks, Peter, and have a great week.
And you, thank you very much indeed. Bye, everybody.